So, meme stocks, everybody is talking about it, but what exactly is a meme stock? And how do you find the next meme stock that is going to the moon, as they say? And that's exactly what we are going to talk about right now. You see, it all started with GameStop, GME. So let me just bring it up here because this is where, looking at the weekly chart earlier this year, it has gone crazy. So what happened? You might have heard it about the Reddit short squeeze of GameStop that happened earlier this year. You see, it all started with a couple of key figures. And let's actually quickly take a look at these. Because first, there's Michael Burry, the well-known activist that was portrayed by Christian Bale in the movie The Big Short. See, Burry noted that GameStop was trading at a massive discount and revealed that his hedge fund Cyan held a position in the video game retailer. Now, this was back in 2019, before all of this craziness happened. And then we also have Keith Gill, who is also known as Roaring Kitty, or DFV, which stands for Deep Effing Value in Reddit forums. Now, in July 2020, again, well before all this craziness, Gill posted YouTube videos outlining why he liked the GME stock, and he showed screenshots of his portfolio. But here's the kicker. Gill also famously held 500 call options for GameStop, which he actually exercised in April of 2021 with a strike price of $12 per share. Now, this is where it gets super interesting. With the 50,000 new shares, this is where Gill now owns over 200,000 shares of GameStop. If you go back and take a look here at the current prices of around $200, so this position is now worth nearly $44 million. I mean, this is just crazy. Okay. Anyhow, so this is where you see the final update. This is actually an update of his account size of his account from April 21st. If we zoom in here, then you'll see that in April, it was already up at $34 million. And now it is even more. But okay, back to meme stocks and why they're called meme stocks. You see, Gill posted his progress, and users of the forum Wall Street Bets started buying shares of GameStop, and this rapidly escalated into a massive short squeeze that led several hedge funds to lose hundreds of millions of dollars. And it caused GameStop, looking back here at the stock, to explode from around $20 right here to a whopping $483 per share. I mean, this is just like, whoa. So this is where GameStop's bring gains for the week to 400%. I mean, this is just amazing what happened there. Anyhow, so what are these meme stocks? We have been talking about GameStop right now, and why are they so controversial? Well, meme stocks received their nickname due to their popularity amongst retail investors who band together on social media platforms like Reddit and TikTok. And I actually found a really cool video where I just want to show you a couple of seconds here so that you have an idea of what this is all about.
Today, Reddit actually shut down the stock market. You will not believe what happened. So basically, all the old guys in suits thought GameStop stock was going to crash. So they all got together and bet against it. But then a band of Reddit users called Wall Street Bets wanted to mess with them. Keep in mind, these guys are famous for...
All right, you get the idea. So in Wall Street Bets, they call themselves apes, right? And these are younger investors who use memes as a regular part of their communications about investing. Let's just peek into one of these Reddit forums. So here is the GameStop forum. And as you can see, the reason why they are called meme stocks is because they communicate through memes. So there's a meme from today. There's another meme. There is another meme. You see pretty much every post, besides a few account screenshots, is memes. Now, let's talk about what are all these different meme stocks, because you see a lot of stocks have recently been lumped together into the meme stock category, as short squeezes have become a popular way for younger investors to try and make some fast money. The short squeeze movement that happened in the Wall Street Bets forum on Reddit, not only is this where Keith Gill, Roaring Kitty or Deep Effing Value, posted his updates, but also the moderators of the subreddit were some aggressive high-risk investors who just said, okay, let's go all in. So Let me just show you this one. Here you see, for example, one of these guys is in with $330,000, right? And this is the YOLO mentality. You only live once of being all in here. You get the idea, and now probably know why they are called meme stocks. Let's move on and let's actually talk about how can you find another meme stock. You see, most of these discussions that you have on Wall Street Bets revolve around meme stocks, and GameStop and AMC have always been the meme stocks. Several others have risen to fame and also experienced short squeezes on their own in the recent months. So if you look at some of them, for example, we see that Bed Bath & Beyond, together with AMC, was one of the meme stocks. And then we also had good old BlackBerry, which are part of the meme stocks here. Why do people buy meme stocks? Well, there's a lot of reasons why retail investors buy meme stocks. Like with any investor, the idea of a short squeeze leading to big profits in a short period of time is tempting enough to take a chance. And this is why many on Wall Street Bets have compared, or no, not on Wall Street Bets, but on Wall Street and the mainstream media, they have compared meme stock trading to gambling rather than investing. And if you look at Cramer, I mean, Cramer is the guy who is basically portraying the boomers, right, that Reddit stands against. And you see, this is where this the stick it to the man and hurt short sellers mentality, because there's a lot of these meme investors who are looking to stand up to Wall Street institutions and actually stick it to the man. Here's a screenshot. You see, only well to stick it to the man is to keep buying AMC and GME. Keep going, soldiers. We love these stocks and tendies. Anyhow, there's a certain pleasure that these meme stock investors get when short sellers, usually hedge funds, lose millions or even go bankrupt from their short positions. If you're reading through Reddit here, there's certainly a David versus Goliath attitude that has developed. And with this Reddit forum like Wall Street Bets now sitting at over 10 million users and more of these subreddits popping up, there's definitely a strong momentum behind the cause here. Anyhow, let's actually talk about what is the meme stock bubble, because a meme stock bubble is like in any other sector on Wall Street. As stock prices get overinflated due to the short squeeze, the general rules of physics apply. What goes up must come down, and this is where we have seen stocks that have been hyped up recently to go down. Now on Wall Street's Bet, they talk about paper hands and diamond hands, but can you really blame an 18-year-old college kid or high school student, right, who just tripled his account in a matter of days for selling it? And that's why many of the latest meme stocks have crashed back down over the last couple of weeks. Let's just take a look at some of them here. Some of them, for example, Wendy's was one of them, going quickly up, but then also crashing down. Clover Health was another one, quickly jumping up and then going down. So there's always a downside to it, as you can imagine. So what goes up comes down, and often is very, very fast. This is something else that I wanted to mention. You see, some actually know how to take advantage of this, and this is where here in the New York Times, the meme stock bubble bursts. This is what they have found out. Anyhow, so the key question is, where can I find the next meme stock? How can we participate in this craziness here? Now, of course, everybody wants to find the next meme stock that doubles, triples, and quadruples in value in a matter of days, but it's not easy to find the next meme stock. So, but there are some guidelines and some criteria for really good candidates. So number one, the company must be known and likable and have an underdog story. You might have noticed that a lot of these meme stocks are legible and nostalgic companies that many investors simply don't want to see go bankrupt, like BlackBerry, GameStop, AMC, right? But the same applies also to Nokia, even Bed Bath & Beyond, that was in this meme stock crazy I hear, still in there. So is there any logic behind these choices? Not really, although some will argue that GameStop and BlackBerry will still have a bright future, especially with Ryan Cohen comes on. So there might be actually a good chance for GameStop to turn it around, and he wants to actually turn it into the Amazon of gamers. Anyhow, so generally speaking, Redditors love to choose underdog companies that are losing out on the modern world. So you'll never find an Apple or Microsoft in this group, but companies that are on the brink of bankruptcy make perfect candidates for meme stocks. Now, number two, they must have a high short interest. So as I said before, there's more to investing in meme stocks than just getting rich quick. Another motive is to herd these short sellers. So it's very important that we find a stock with high short interest. Otherwise, you'll never get that squeeze that helps the price run up so high so fast. So you can find a short interest on most financial sites or stock screeners. So that's an easy way to parse through the thousands of different stocks. Super easy here. So generally speaking, just a short interest of over 20% is considered high and can be a potential target for a short squeeze. And just for reference, at its peak, GameStop's short interest was a ridiculous 142%. So that's just crazy. And this is where I found this article. GameStop on CNBC jumps another 90%, but short sellers aren't backing down. And this is what fuels it. Now, what's a third criteria to find the next meme stock is here. The management, possibly the CEO, must be pro-retail traders. And this is where AMC actually did it perfectly. You see, AMC recently said that they reward retail investors with free popcorn and exclusive screening. So the CEO, Adam Aron, has praised retail investors on numerous occasions. And this is why right now AMC is still the poster child of these meme stocks here. Another example is GameStop's new chairman of the board, Ryan Cohen, the former CEO of Chewy, and he's seen by many Redditors as the savior for GameStop, and he often posted memes on his Twitter account. Let me just show you his Twitter account here. You know, meme stocks, you have to communicate in memes. Anyhow, this is just one of the memes that he is posting here. He posted this on January 17th, just shortly before all of this was going on. And again, he has big plans. I mean, he has plans to try to push GameStop to become the Amazon of the video gaming industry. Anyhow, so what is another criteria here? And this is where we go back to the charts and we look at AMC and GameStop. It must be cheap. It must be cheap. And you see, preferably around $10 or $20. So this way, a trader with a smaller account, let's switch back to a daily chart here, like $500 to $2,000 can buy them. So AMC, when all this craziness started, was trading at around $10. GME was trading at around $20. And if you look at companies like Clover, they were trading around $8 to $10. Wendy's here a little bit higher, around $20, but you get the idea. Anyhow, perhaps the most important part of the equation, the average Robinhood account, which is only around $5,000, have to be able to afford it. This way, they can join in of the fun of the short squeeze. So they buy a lot of shares here. Good. This is how you can find the next one. You see, it's not that difficult, but with so many stocks out there, how can you really find it? We won't definitely not find stocks like Amazon on there, which is trading right now at $3,500, or Google, which is trading at $2,500. Because at these prices, if you think about it, meme investors can only afford one share at a time. Key question is, which stock is safer? Because is it safe to invest in meme stocks? And if you're asking about the safety in stocks, the answer is always going to be the non-meme stock, because these meme stocks come with incredibly volatility that is definitely beyond the risk tolerance of most investors, including myself, because meme stocks have been known to drop down by 30% or more in a single trading session. And these swings can wipe out an entire account in a matter of days. So meme stocks are crazy because one day they're loved by Redditors and the next day they might focus on something else. So recently I said Clover, Wendy, I mean, all of these on Tuesday, Redditors liked it. On Wednesdays, they didn't. And these bubbles are fun to ride up. But what if you miss it on Tuesday and start buying on Wednesday? Let's take another look here very quickly at Clover. You see, there's definitely somebody who has bought it right here when it was going up at $28. And now they're stuck with a big loss because today Clover is down to $11.20. So would I invest in a meme stock, and what do I do? Well, at this point, I'm much happier with my PowerX strategy and my wheel strategy. Just to give you an idea, so this is where we are doing really well. This is the wheel strategy, and thus far this year, I have realized over $100,000 in profits with the wheel strategy. Anyhow, so this is why I stick with that. I love the SRC profits, strategic, repeatable, and consistent.